Hello traders and welcome to another video review. Today is Monday, June 6, 2022. Let's start with the Forex calendar review. As you can see, there isn't much data scheduled for release today. We got some data from the New Zealand, from the US. However, they are not likely to be a kind of a market movers or anything like this. The most important data had been published last week on Friday, particularly in form of the NFP payrolls and so on. Today it will be kind of interesting to see how the American markets will open. So let's just take a look quickly at the majors and then on the American markets, because this is the Monday and Thursday after the NFP data had been published. So it's kind of important to see whether the sentiment on that was dominant sentiment on Friday will prevail today as well. Daily time frame chart of the US dollar to Japanese yen is showing a sign of a strength again after the last rally towards 131.38. This is the top. We trace minus 3.77%. Then we broke above this short-term trend line and then continue to rally above technical resistance 130, and now we are approaching 131.38 again. So very interesting situation. The uptrend is still the dominant trend on the US dollar to Japanese yen daily time frame chart. We are very close to the 70 level. The 70 level, please remember, this is the level on the RSI indicator where the RSI is actually extremely overbought and the market is extremely overbought. So we got this negative divergence resolved, minus 3.77% correction or a pullback, brief dip below the 50 to the level of 45 points, and then nice big breakout and rally back into the positive territory. So the US dollar is back on track towards the new highs. So what's the US dollar index doing? If the USD is back on the track, let's take a look. US dollar index is not that keen to rally yet. We just finished the wave B of the overall three wave decline. We got the bearish engulfing, then market tried to bounce, failed, and right now we are trading still below the technical resistance 103.32 and below the key short-term resistance at 103.16. We still should expect the test of 189. This is the technical support, and maybe even we will go as low as 99.38. This is the very, very nice from the technical point of view target level for the wave C here, because those waves, the wave A and wave C measured from the top of the wave B, will be particularly equal around this level. So very interesting to see whether the market will be weak enough to go to this level. But please remember, this is the US dollar index. It's the whole basket of the US dollar related pairs. So there might be some kind of a fluctuations inside of the basket, and this is why we shouldn't assume that 100% that there is another wave to the downside here, okay, on the US dollar index. Let's take a look at SP500 after the NFP payrolls. There you go. So what's happened on the NFP payrolls? We go lower, we go down apparently. Please notice the fact that for the whole week we've been trading just above the key that was the technical of course resistance and the supply zone. We broke above it. However, there is no follow through where to the 50% of the Fibonacci retracement, 4,227 points, or towards 61% of the Fibonacci retracement of the last wave down, of course, I mean this wave. Let me just make it a little bit more visible, squeeze it a little. 4,324 is the level of 61% and the key short-term technical resistance. So far, bulls are not that keen to rally. Bulls are not that keen to rally. NFP Friday data, the reaction of the market for NFP Friday NFP data was down. We are still being protected by the 4084 technical support, which is why this is still there are still some kind of wicks on the bottom of the daily candles, because the bulls are defending this level. However, in the case of a breakout, we go as low as 3857 points, which is why it's very important to keep an eye on the S&P 500, and I assume that the most of the indices is behaving just like this. Let's take a look at DAX. We have not been looking at this particular index for quite some time right now. Let me just zoom out first. Let me just zoom out first to see the context of the current development. Please notice the fact that we would trace 61% of the last wave down. Fine. We went lower in corrective manner. Okay, we got overlapping structure here, so that might be the impulse, that might be the wave B. So we got wave A or 1, wave 2 or B, and now we might be developing wave 3 or wave C to the upside. 61% is already done. We don't need it anymore. What we need actually is the technical resistance, which is somewhere here. It was violated already. However, there is no close for this level yet. So let me just make it thick red line. Let me just now zoom in, and this is what we got on DAX right now. I don't see any particular reason why this should not be the wave 3 or wave C that will pass the highs from the end of the March at 14,924 points, because if you take a look, we are trading in this last wave. We are trading, oh, not this one, very nicely inside of the channel. We have the rising channel here. Please take a look. Very nice technical action here inside of the channel, making locally higher highs and higher lows. So the next target 14,823. Okay, and then we might even break above these levels here, which are of course the technical resistance levels above the 15,000 points. So current scenario for the DAX is ABC pattern or ABC or 1, 2, and possibly even 3. So one or A, 2 or B, 3 or C. Right now it's hard to say whether this will be 3-wave rally, ABC correction, or it will be a fully blown impulse developed here. 1, 2, 3, 4, 5. So please take a look. 14,823. This is the level for this week from the resistance, of course, point of view, from the bearish point of view. For bulls, we got the technical support. However, this one is not that much accurate because we got the new data or chart. The other one is here, but that's not the resistance. That's the so that's not the support. That's the resistance. It's in red. This level here is no longer really important. I guess this technical support 14,317 is much more better for now, and that's about it. That's the two key levels here. We need a breakout above 14,605 in order to get towards 14,823. Okay, let's take a look at Bitcoin because it's been showing a signs of a strength again. However, on the daily time frame chart of a Bitcoin, maybe I will just zoom in because we know very well the current situation and the past situation on the Bitcoin. This is what we have right now on a Bitcoin. We've been trading inside of this range. I've recently just widened this range because of the new data for quite some time. The low was made on the 12th of the May. We already have 6th of the June. So one more week and we have a 1 month consolidation basically, because every rally here has been capped so far. So there is not much of a bullish development here. And please take a look at the current situation. We still can have some sort of the decline, and I'm still thinking that we should have at least a spike lower towards 25,437 before the bigger rally is possible. Right now the situation is kind of a different for the next leg to the upside, because we got this situation here where the key short-term technical resistance is still 34,290. However, we might do of course a breakout towards the blue channel upper line, then test the support and then rally higher. However, we didn't even broke above the range. 31,264 is still the upper level for the range. So please be careful with the Bitcoin. This rally, this weekend rally here, this 2 days here, doesn't mean that we are going to the moon yet. Okay, so please be careful with the Bitcoin. We might have next day with the big red candle. Again, please notice the fact that we barely broke above the level of 50. The local level is 50. The local number is 51.33 on the RSI, which is just above the level of the 50, the neutral level that separates the positive from the negative sentiment. Very interesting situation. However, this recent rally doesn't mean we go straight up to the moon yet. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.